Hello, welcome to ArashInvest. Welcome back. Last week I gave you 6 rules, the rules that nature uses, that also works in money. But I left you with one question. It was actually a big one. Why invest at all? Not which stock to pick, not which application to use. Rather, the real question. Why we should take the risk, why we could just save. Today I give you the answer. And it's not gonna be a financial answer, rather a biology one, so you can feel it. Let's go. Reason 1. Everything left alone falls apart. In science, we call this one entropy. Nothing needs to attack it. The time alone is enough. Let's picture a small pond and just imagine no rivers feed it and at the same time no rains come in. Every single day, a little water disappears into air. The sun alone takes it, slowly and every single day. One day, the pond is gone. Nobody attacked it, it just evaporated. Your money does the same exact thing. Nobody has to steal it. Prices and the cost of living alone are enough. Let's imagine a scenario. You saved 500 euros every single month, or US dollars if you are in US. And you did this one for 26 years. Now look at this line. It climbs and it looks healthy. If prices never move, this is the whole story. But hey, everybody knows that was a joke. Prices do move. And now look at these charts. This is the inflation. Every year in Europe and every year in United States. Just look at them closely. Every single year, the chart is almost above zero. Some years are small and some other years big, but almost never zero. This isn't just one bad year. It is every single year for 26 years. So here is the same money again. The red line is what actually your bank shows you. It is the number you see when you open your bank application. But look at the dotted line below it. This is what that same money can actually buy. Now look at the gap. This is the inflation. It is not a separate enemy. It is just a space between what you have and what it is worth. Just look at those 3 red arrows downward, which is specified for 3 years. Even though your number, the red line, kept growing, the real value did not grow the same way. So, same money and less power. Now you might say, I don't use cash. Instead, I use a good saving account. Okay, fair enough. Let's check that one together too. Here is a good saving account, the yellow line, that I added to the same chart. Yeah, it is better than nothing. It helps. But look at the dashed line above it. This is what you truly need to just keep the same buying power. So you see, even a good saving account falls short. Not by far, but anyway, it couldn't keep up. So overall, you see that saving is not wrong. It is just not enough. It can slow bleeding, but it cannot stop it. So if safety alone cannot win, what does? Reason 2. Do you remember the peacock story from the last week? If you have not seen that one yet, you could just check it out right up there. The peacock tail is big, slow, and also is very dangerous to carry. Anyway, it exists because it does work. Here is something new. It is not just that risk that beats safety. Inside the group of peacock, who takes the risk? The one that has a big and extreme tail and the most beautiful one? They can get most of the mates. So you know the reward is not flat, it grows with the risk. Safety has a ceiling, but risk does not. Quick fact, because I want you to trust this is not just a nice story. This idea of the peacock tail, it's actually called cost signaling, is the actual field of my research in PhD. Well, I didn't do it in peacocks, but I did it in plants. Yeah, plants playing the same game too somehow, by having bigger flowers, bright colors, and huge amount of nectars. It costs them something, but is exactly the point. It proves they are strong enough to afford it. And I published the research in a journal called Biological Reviews. And if you want to go down deep in biology, write a comment and I'm gonna send it to you. So when I tell you risk and reward written in biology at every level, plants, animal, and the market. I'm not guessing. I spent years inside this exact question. Now let's zoom out. The same chart, the same 500, and the same 26 years. For this example, I'm using the whole stock market, not a single stock, rather 500 of the biggest companies in America, all together as one. I picked this one on purpose, because it is the safest way to take this risk. Many people called it boring, but not everyone. We will go deeper into this and other ways of investing in a future video. But this time watch what happens when the same amount of money take risk instead of staying safe. Cash alone, the red line, it made it 156,000 in hand, which is even worse less in real terms. When you had a good saving, the yellow line, it could make it 200,000, which is pretty better. Now look if you invested that amount of money and take the risk. It would be over $800,000 or euros. So you see the risk was not the mistake in this story. It was actually the price of the growth. Same as the peacock, same as the plant, and same as any organisms that ever grew in past and survived. So why invest at all? First, because standing still, it is not just standing still, it is actually slowly losing. And because nothing in nature grows without taking the risk. Not the peacock, not the plant, not even you. Saving protects you. However, investing grows you. Yeah, you need both of them, but actually only one of those can carry you past just surviving. Next week we open the machine. How do you actually buy a piece of market? What is an index fund? Those 500 companies that we talk about it. And what does it cost you? So if you want to understand money the way nature understands survival, this is your channel. Like, subscribe, and I'll see you next week.